Markets are balancing a resilient economy and strong corporate earnings against inflation, geopolitical risk, and uncertainty around trade. Joining us now is Lori Pinkowski, Senior Portfolio Manager and Investment Advisor at Canaccord Genuity Wealth Management. It's great to have you join us. Thanks so much.
Yeah, thanks for having me.
Okay, let's start with the big picture here, because obviously we've been seeing a lot of volatility lately, but corporate earnings have remained relatively strong. How are you thinking about kind of balancing between those risks and some of the underlying health that we're seeing in the market as well?
Yeah, this last earnings quarter and work is kind of coming to an end here. But when you look at not over 90% of companies have reported, we are seeing 87, 88% of companies beating expectations is great news. And it's really across the board. It's not just in technology, which is what people were really focused on, seeing if the AI spend is valid and if we're seeing it on the bottom line, which we did. But it's really in other sectors like industrials, materials, financials. And so in order to have this bull market continue, you need to have broad-based sectors, participating in that growth. So when we look at earnings season, we're very happy with it and looking forward to the remainder of the year.
When we talk about the U.S. retail sales, it's one of the most important tests of the consumer. What are you watching for to determine whether the consumer is still strong enough to support the economy and equities? What did you make of that data?
Yeah, so when we're looking at the consumer numbers that came out, we saw a 0.6% reduction there and 0.2% month over month if you take out auto and gasoline. And when we're looking at consumers, they are still strong, 5% growth year over year. And also, we always look under the hood at the economic data and not just take it at face value. And so one of the contributors was lower online sales. And given that Amazon moved Prime Day from July to June, that skewed the numbers slightly as well. And so when we're looking at going forward, sometimes bad news equals good news in this environment, right? When we saw weaker unemployment numbers as well last week, it just gives less motivation to the Fed to look at hiking rates. And again, we're in the camp that we didn't believe we would see a hike this year. And so when you look at those consumer numbers, definitely Amazon was a contributor to that number. And going forward, we want strong consumers, and we still have unemployment in the U.S. At 4.1%. So I wouldn't expect to see much difference there. And then look at the inflation numbers as well, as we're going to talk about.
Yeah, we will talk about that in just a moment. But I did want to ask you about Canada, the August 19th trade deadline. Obviously, that's been big news all week, while there's kind of rumblings of maybe some progress on that front. What are you watching for in terms of what you've been hearing, and how are you thinking about that risk for Canadian markets?
Yeah, so when we're looking at the tariff situation, I mean, it's not that we haven't seen this movie before, right? Trump comes in very strong, talking about 50% tariffs on $20 billion worth of goods. That's about 5 to 6% of Canadian exports. And again, wide range, furniture, sporting goods, clothing, whatever it may be. And what we've heard and what we've seen is that talks are continuing to happen. And hopefully they can get some sort of deal done before the August 19th deadline. We don't believe it's going to be 50%, just like when we saw Liberation Day tariffs. I mean, they started at 40, 50%, then kind of came down to 22, and then ended up landing around 11% on average. So the talks will continue. What is important for us as money managers is to ensure that we understand the risk to the particular companies that we own, in which sectors. And so we're obviously watching this story very closely with making decisions on client portfolios, just as what we did leading into the Liberation Day situation. Like, we looked and analyzed each one of our companies and what would be the effect from such a tariff. But again, we don't believe it's going to be 50%. Hopefully, Carney can figure out a fair deal for Canada here, because it does affect small businesses, affects obviously the Canadian economy, and us as Canadians. And there's a lot of uncertainty around that, right? So we want some clarity, and we want to see some final kind of numbers and understand how that affects the Canadian economy as a whole.
Mm-hmm. Okay, as promised, I did want to ask you about inflation, because obviously we saw a lot of data coming out this week, CPI data, PPI data for the U.S., giving maybe some clues about the Fed's next move. What's your outlook when it comes to rates?
Yeah, so when we're looking at the inflation data, it came in lower, which is good news, right? And when we're looking at core, which is important, X food, X energy, which is more volatile, still in that mid 2 range, right? And so when the Fed is looking at whether they should reduce rates or sorry, whether they should increase rates or not, clearly this is not giving them a strong reason to hike rates at this time. And expectations, if you look like a few weeks, months ago, expectations were for a rate hike this year, and the probability was quite high. Now we're looking at like a 30% probability in September. So again, we are in the camp that rates are staying where they are for now. I believe the Fed is focused on understanding that this kind of little spike in inflation that we had is very much oil driven due to the war in Iran. And for us with that situation, there's a lot of motivation for both sides to come to the table and really come to some sort of decision here. The reason being is the Iranian economy is being affected. And then on this side, obviously, midterm elections are coming up. Trump doesn't want to have high gas prices at the pump. So we'll be looking for a deal to get done. And a lot of people are wondering, why is oil not even higher when you have not a lot of ships going through the strait at this point? Well, there's alternative routes being used, like the Red Sea.
Yeah.
You've also got like the U.S. depleting their own reserves, and even China's demand has also come down because they're tapping into their own reserves. So keeping oil prices, I don't want to say stable, but stable enough, right? And sitting at 81 there or 82 for crude right now. So there's lots going on. Our view, bullish for markets. We did a lot of work after midterm elections. Markets move higher. So there might be some volatility leading up to that. But after this earnings season, inflation numbers, I feel like we're in a good space.
Okay, we got to leave it there. Lori Pinkowski, Senior Portfolio Manager and Investment Advisor at Canaccord Genuity Wealth Management. Great to have you join us. Thank you.
Thank you.